And Gary, I heard you groan quite openly when you heard the lines at the Treasury Department noting this is going to more than pay for itself, this tax reform package. And you said something like, what, sell me a bridge?
Yeah, sell me. Well, the 1964 tax bill, which was introduced by Kennedy, passed by Johnson, promised that the budget would not exceed $100 billion. It was $118 billion. The deficit went out. Then you go to the Reagan tax cuts in the early 80s, and then the idea it was going to pay for itself again. Well, obviously it didn't. The deficit went up. I mean, that's always the song to sell these things.
Right.
But it doesn't. It just doesn't work. I mean, at least it hasn't historically.
Okay. So on the flip side, how much worse is this going to make things? Is it?
No, it isn't. I mean, this is a corporate tax cut. 3/4 of it go to corporations, and of course we're out of line with globalization. We have 35% tax rates. Ireland's got 14.5, and of course we tax profits worldwide wherever they're earned by U.S. multinationals. Everybody else taxes only in the country they're on. And that's why the Apples and Microsofts, the other collectively, they have $2.6 trillion overseas. But the other,
this is going to help that then.
Yeah, but you know, about 90% of that money is invested in U.S. securities, treasuries, corporate bonds, stocks, and so on. As long as they invest in financial assets, they don't have to report it as taxes in the U.S. But if they use it to pay wages or for capital spending or dividends, they do. But the money is already here. It isn't going to make much difference in terms of the dollar. It isn't going to be brought back. But you look at capital spending, and I just had a Bloomberg View column today on this, you might know, and really pointing out that capital spending is really controlled more by capacity utilization, and it's been so low there isn't need for a lot more. And you know, anyway, if you look at Apple, if they want to build another plant in this country, they don't have to bring money back. They do it out of petty cash, or they ring up the banks and they're only too happy to lend them, or they float some bonds. You know, I don't think it's going to make it's a rationalization. It certainly makes things more responsive to markets, but I don't think. And the other thing, of course, is individuals only get 1/4 of this. Yeah. And the reason for that is because Democrats, it's anathema for them to cut taxes on the top, but the top 1% pay 39.5% of all taxes. The bottom 50% pay only 2.8%. If you're going to cut taxes for individuals, you have to do it on the top. And with almost a split Congress, that just wouldn't fly.